Welcome to the Daily Update, where I'll go over the action in the market for Thursday, January 19th, and then we'll see how things look for Friday, January 20th. And we had another down day. We're starting to shift more negative now. Our technical picture is starting to weaken as we roll over, but still, we're kind of in the middle. The big technical event that happened was coming up to that trend line, prices rejecting, going higher, and then we've been going down ever since. We'll have to see if this continues and then what weakness may follow going forward. Let's go back and talk about what happened. Right at the open, we had a gap lower with prices falling down to S1. That was at $38.99. So we've given up the 3,900 level. As the day went on, prices drifted above and below S1, only to come back down and close right at S1. We were down 0.76% on above average volume. It is options expiration week, so we tend to see a real pickup on those weeks. The technicals are negative overall, with inflation and interest rates being the real focus now. We went from this scenario of, maybe the Fed's getting close to being done, and so we can start to buy, trying to anticipate this, to, the economy might be falling off a cliff and prices are starting to go down as far as stocks are concerned. We better sell and feed into that selling that's been happening. That's coming about from the earnings per share and valuation concerns that we're dealing with. We also have earnings that are being released on a company-by-company basis, and there is some Fed speak that I'll go through and talk about. Here is the intraday chart. And I'm trying some different things with the cursor, so please, if you see it dart all over the place, and I'm trying to do what I can to stop that from happening. We gapped lower right at the open, and the futures were negative during the night, anywhere from about 0.5 to 0.75%. Well, that produced a lower open. We went down to S1. We actually fell below S1. We tried to come back above it, never made it to the unchanged level, before then seeing some afternoon weakness and coming right back down to S1 and closing there in the session. So what are some comments that we can make? The current scenario is the markets are more negative slanted with this growth and rate hike concerns. The CEO from JP Morgan Chase, Jamie Dimon, he's an influential thinker out there. He has one of the biggest banks in the world, if not the biggest. And when he says something, it's not necessarily anything that we don't already know if you really pay attention to the markets and what's happening. But a lot of people latch on to what he says. And so in an interview, he came out and said, I think there's a lot of underlying inflation, which won't go away so quick. He also said later that he thinks that rates will top at 5%. None of this is necessarily new to us, who've been following and keeping track of things on a consistent basis. But when he talks, the rest of the market tends to really listen. Also, Fed Vice Chair Bernard came out and gave a speech, and this was scheduled, and I'm going to start including that in the Outlook area near the end of the video. And even though she didn't say anything that was necessarily new, it was still noteworthy. She's quoted as saying in her speech, even with the recent moderation, inflation remains high, and policy will need to be sufficiently restrictive for some time to make sure inflation returns to 2% on a sustained basis. This is nothing really new. So the markets didn't really react to this speech. Also, another thing that's probably hitting a lot of the news cycles right now is that we've reached the debt ceiling. And so Treasury Secretary Yellen sent a letter to Congress notifying them that we have reached this ceiling, and the Treasury Department may be starting to do something to take care of that. I would look at this as being more of a short-term event. It's more political in nature. They've known this was going to happen. They'll probably pass something that'll just kick this down the road a few months, and then we'll be right back here again. But this might have some impact, and you're going to hear some back and forth probably through the media. Even though we were down in Thursday's session, growth did do better than value. They were both down overall, but growth was down less than value. The dollar was down slightly and interest rates were up. So the rising interest rates gave some headwinds to stocks. Copper has also been climbing and it's still hanging on to those gains. That could be more positive because of Dr. Copper, and it looks out into the future. And when copper starts to show an improvement, it typically means the economy will improve going forward, but we're not really seeing that. All of our evidence is suggesting otherwise. The 10 to the 5, the 10 to the 2, and the 10 to the 3 month still remain inverted. And I have a chart to show you the 10 to the 3 month because it's becoming even more inverted. Sentiment has dropped now to neutral where we had been positive. And the economic reports that came out, we had weekly jobless claims, which did put some pressure on the markets. The futures were already down, but the media is trying to tie these two together. They came in at 190,000. That was a lot less than the 212,000 that was expected, and still suggesting that the employment situation remains firm. Total housing starts came out, and they were down 1.4% on a month-over-month basis. If you look at this at a seasonally adjusted annual rate, that would be 1.382 million units, a little bit more than the 1.355 million that was expected. Building permits also came out, and this is a leading indicator because you have to get a permit before you can build anything. They were down 1.6% on a month-over-month basis and a little bit less than the 1.37 million that they had expected. It came in at 1.330 million. The Philadelphia Fed Index also came out with a reading of minus 8.9. That was better than the expected reading at down 11. Last time it came in at minus 13.8. So we're showing a little bit of improvement there. As far as our trend, it's still positive, but the red line is just about getting ready to cross the green line. And if we see more weakness, that very well may happen. Because these lines are getting close to each other, our trend is weakening. And we're still below 20. So this is a trendless environment. Our bias is negative with the down 2 days. We've dropped over 2% now in just a couple of days. And I've switched our momentum over to being negative also. Here is a look at a chart from Edward Yardeni showing how the operating earnings per share, how the estimates have been being brought down pretty much across the board. And that is feeding into this idea that maybe stocks are overvalued and need to come down in price to justify current valuation levels. Also, here's a chart of the weekly jobless claim showing how that they are declining overall. And this just suggests that the employment situation is holding up for right now. Also, continuing claims, this is a little bit more delayed data, but we're still below the moving average overall. Also, I've been showing this chart of the price pattern. This chart looks from 2005 through 2008, and then it puts the current price of the S&P on top of this to see, are we matching this? If we do match this, and it looked like we were getting kind of away from this basic price pattern, but if we do go back and follow what happened on the yellow line, it can suggest that we will see some weakness going forward. The same thing is true with this chart. This is showing from the late 90s, 1998 through 2002. That was also a really difficult time for the markets. And how if we follow this same basic price pattern, we might see some weakness going forward. These things are kind of interesting. They can be just kind of guideposts for us to use. I don't necessarily make any decisions based on this. I use the other indicators to do that, but this can still be kind of helpful to give us some insight. We also had the latest reading of the individual investors, and they're showing some improvement. Now, this is a week old, and we had a good week a week ago, and so it's not really surprising that we're seeing some improvement on this chart. And we're still looking at the VIX to the S&P 500 correlation after giving us a real high spike. It's been coming down, and sometimes that often gives some support to the S&P. Well, we're just not seeing that. Also, the Ulcer Index is turning back up as we're going down in price. We're seeing a little bit of fear start to increase. Now, the midpoint is this moving average, and that's pretty much where the sentiment reading is at right now. So this is suggesting that there's still a little bit too much positivity or complacency in the market. Also, the equity put call ratio, I've been finding that I'm getting this data a little bit late. In Wednesday's session, I stated for Thursday that we had a declining day and the put call ratio also went down. Turns out that was not true. We did go up. I just didn't have an updated chart. So we did go up in Wednesday's session, and then we came down slightly in Thursday's session, but we're still giving a pretty high reading overall. What we look at mostly is the 5-period simple moving average, where we're coming off of this big spike. It's been coming down, but now it's starting to go back up. So is this going to generate another signal? And here's a longer term look at that same chart. The VIX is still pretty low overall, even though with the declining day it spiked up both on a closing basis and on the bar chart. We're still pretty complacent. And this is a lot of justification that people are using to say, stocks should go down. Look at how low the VIX is. When the VIX is low, it's time to go. And that is feeding into some of the frenzy that we're currently seeing. And here's the VIX of the VIX, showing how even though the VIX is still pretty complacent, the volatility of the VIX has been going up slightly, but it's really not changed from Wednesday's session. And looking at our trend where we're starting to go back below the moving average, so we have a weakening trend now. The green line's coming down, the red line's coming up, and these could cross very, very soon. We might switch over to a negative bias. Here's our daily chart where we just came right up to that trend line and rejected that. We broke down through the 200-day moving average, and now we've lost the 50-period moving average, and we're right back down to the monthly pivot. So as of Friday's session, we're at an impasse. Are we going to be able to get back above this pivot point and close in Friday's session, or are we going to drop down below that? Things are looking a little more negative, but it is options expiration, and the market can always do anything it wants to do. Looking down at the bottom, we see where volume was above average, even though it did decline from Wednesday's session. Here's the stochastic. Short term is no longer extreme. Intermediate term, no longer extreme. The long term, short term stochastic is starting to roll over, although it's still positive. Bullish percent index, showing a little bit of weakness. It ticked down with the downward movement. It's still above 50 though, so it's positive, but starting to show some weakness. And the Chaikin money flow, this has been holding up a little bit better. Sometimes this tries to see what's the big money really doing. And so this is showing some weakness right now, but it is still positive overall. And our vortex, even though we're still positive, we're seeing the green line coming down and the red line going back up. If we see more follow-through weakness, this could switch over negative. Here's our short-term fib level, where after coming up to the 61.8% retracement level at about 4,006, we rejected that. We're coming down. We've now broke below this 50% retracement level, and we're coming down to the 61.8% retracement level, just a little bit below where current prices are at. The longer-term fib chart shows we're kind of in between the two big fib levels. Swindling Trading Oscillator starting to show some weakness based on price and dropping below zero, also declining based on volume and not quite below zero. Our moving average tree, kind of a mess, where we ended up dropping down below the 50-period moving average, and we're well below both of the 200-day moving averages. The CMB Composite Index has now generated a sell signal. We had a pretty extreme reading here. It's dropped down. It crossed above the red line. That was an initial trigger to go short. It's now been confirmed once it crosses below the green line. Elder Impulse has now switched to negative, where we had been neutral. And the McClellan Oscillator has dropped below zero. So that's turning negative. And we see that slightly in the Summation Index. Based on price, we're turning lower, and based on volume, we're starting to go down. Relative Strength Index, both the 14 and the 9 period, they are dropping below 50. So this is generally when it's above 50, that's considered more positive. When they drop below 50, that's considered more negative. The new highs, new lows, showing some weakness here. Could be getting ready to roll over, but hasn't quite crossed yet. And we're pretty much flat with our 10-day differential. Advanced decline line showing some weakness based on price and follow-through weakness based on volume, and we're below the moving average. Our advanced decline ratio starting to drop below zero, so that's turning more negative. And looking at the home builders, where they're pretty much going in step with the S&P right now. So since it's been going down, the home builders have been going down also. So their ratio is still holding up fairly well, and we're having a tendency to go in the same direction. Copic curve, though, is still giving us a buy signal, but a few more days of weakness and we could lose that. The same thing is true with the Pring Bottom Fisher, also giving us a recent buy signal, not from a real extreme negative reading, but we could lose this if we see follow-through weakness. And here's copper, where it really spiked up. It's come back down a little bit, but it's been hanging on to the majority of those gains. And here's our 10 to 3 month curve, where it's just getting even more inverted, where we've dropped below the 2007 level and even the 2000 to 2001 level. Not really a lot to update with our possible positive scenarios. One thing that is a little encouraging, because this is more of a slow indicator, the new highs, new lows, 5-day moving average, that continues to advance when you look at the Amex, the NASDAQ, and the NYSE, but we're not really seeing that confirmed with price movement. And then our spike of the 2-year yield, we're still wondering, is this a spike? Will we start coming down? That can sometimes give short to intermediate term support to the S&P. And the small cap index, after just giving us a recent golden cross, is now coming back down to its 50-period moving average. So we'll be watching that to see if that can hold and give some more support to the market. And the small cap to S&P 500 ratio, it's still going up, which could give some support to the blue line, which is the S&P, but we're just not seeing any follow-through action. And then our staples to S&P 500 ratio, it's continuing to fall. This might be a viable spike, which a lot of times that marks a low in the S&P, but we're just not seeing price action confirm that. So what's our outlook then for Friday? It is options expiration, and based on the Stock Traders Almanac, you got about a 50-50 when it comes to the Dow. Last 24 times it was up 12, that means it was down 12. But the last 12 periods, 9 of those have been positive. Not any kind of a prediction, just more statistical. Technicals are turning negative after hitting that trend line resistance. That was the big thing that really caused the shift. We have existing home sales coming out in Friday's session, and then the whole list of geopolitical events with the market currently fixated on inflation and interest rates, which is producing growth concerns. This is also feeding into the earnings per share and valuation concerns. And then we have earnings that are being released by each individual company. And then I'm also going to start including a Fed Speak section when it's applicable. So on Friday at 1 p.m. Eastern Time, Governor Christopher J. Waller will be giving a speech entitled Economic Outlook, and he'll be talking to the Council of Foreign Relations. Just kind of keep an ear open for that, just to see if there's anything said that might cause some kind of a reaction in the market. Looking at the Stock Traders Almanac for Friday, January 20th, really not anything all that particular. We're neutral to negative, with the Dow being up 42.9% of the time. The S&P's up a little bit more at 52.4, and the NASDAQ's up 42.9, same as the Dow. And then the other areas that we've been looking at, where January tends to be more negative than positive over the last 23 years, but we're still in that positive window of November, December, January. On a yearly basis, we're waiting to see at the end of January what will the barometer be, if we're up on the year or down on the year. And then the market also likes that we have a mixed government right now, split between Republican and Democrat. So our scenarios, can't really go with the down one now because we're not trending, even though we are turning more negative. We can't go with the up scenario because of this weakness that we've been seeing. Our scenarios, our rotation, they're holding up for right now, but with the down days, we do see some weakness in those indicators. That's why I'm not showing you the charts. We have some support where we're at right now if we continue to fall. We also have a lot of resistance above where we're at. And we're going with the sideways scenario right now because the ADX is weakening. It could be getting ready to cross over negative, and we are below 20. So what is our conclusion? The S&P is turning negative. Can't really dispute that right now. You see more than 2% of a decline in 2 days. It's going to impact the charts. Short term, we're turning negative, as well as intermediate term, and we continue to be negative long term. Thank you. Have a wonderful day on Friday. I will look at preparing the videos over the weekend, the weekly video, the intermarket analysis video, and the deep dive video.